Hi guys, it's Stock Curry, and in today's video, we're going to do a full stock market analysis, and we're going to look at both the bull cases for the stock market as well as the bear cases for the stock market. We're going to be looking at the fundamentals, the technicals, and the historical analysis to try to come up with an idea of where the stock market might go from here. Of course, we've also got to cover earnings, especially the Disney earnings, which were phenomenal. And in addition to that, we are also going to go over the CPI inflation numbers. So let's get into it. First of all, as you can see here on the screen, the Wall Street Journal released an article today that said the Nasdaq Composite is back in a bull market. The tech focus index has risen more than 20% since mid-June, although it is still down 18% for this year. Now, let's talk about this. What I want to do is we're going to get back to this to look at whether the stock market bull run is going to continue or not. But before we get to that, let's go talk about earnings. And first of all, the Sonos earnings, they did not do so well. Sorry, I should have blown that up for you earlier. But the Sonos stock slid. They missed. Let's see, they had revenue was down 1.8% from a year ago. And the forecast was for 423 million, but they only got 328 million. Pretty big miss here for Sonos. And their stock was down 18% after hours. Now, Bumble also reported earnings, and their stock missed as well. They actually cut their 2022 revenue forecast, citing a strong U.S. dollar. We talked about that, how international companies are going to get hurt by the strong dollar, as well as the ongoing war in Ukraine. Excuse me. And Bumble, after hours, was down 11% after hours. Now, Disney was the beautiful joy in the earnings. Disney blew earnings away. They blew their estimated earnings away. So not only did Disney's subscriber growth just go way above estimates. Estimates were for 147 million, and they actually had 121 million subscriptions. So blew that out of the water. They also beat on revenue and earnings. So let's see. This is interesting too. So between ESPN, Hulu, and Disney combined, Disney now has 220 million subscribers. Well, 221 million to be exact. And Netflix has 220 million. So Disney's three streaming services combined are now larger than Netflix total subscribers. So incredible news there. And let's see, trying to find the actual numbers. Okay. Oh, the only downside of this, though, the only downside is that their streaming services lost $1.1 billion. All right. Earnings per share was $1.09 versus only 96 cents expected. Revenue came in at 21 billion versus 21.5 billion versus 21 billion expected. So just a complete and total beat on Disney here. And Disney, not surprisingly, was up 6% after hours after already rising 4% on the day. So overall 10% up. Just absolutely incredible on that. Now, one thing I do want to do on Disney is just do a little bit more analysis, because it's been a little while since I looked at the stock, and I'm not sure if you can see it here on the screen, but Disney had very strong support at $90. It just refused to go below 90. Very, very strong support here. So given that Disney now earned over $1 in the quarter, how are we looking on PE ratio? Well, if we do that, it was $1.01 times 4 would be $4.04. So 112.43 divided by $4.04 puts us at a P 27.8. And if we take a look at Webull's calculation, they have forward PE of 28.6. So pretty much in line with their forward expectations. Personally, I think going into a recession, a PE of 76 with a forward PE of 28 is still too high. I still think this needs to come down a little bit, but certainly the fact that they had $1 earnings for the quarter is significant because take a look at this. For the entire year last year, their earnings was $1.11, and they just reported $1.01 in one quarter. So significant improvement on Disney and just phenomenal earnings. But going into a recession, I still think this is a little bit overpriced. All right, those are all of the earnings. What I want to do next is we'll get to the CPI. But before we do, I just want to go through the comments and make sure I'm not missing anything here. Let's see. Good morning to you, Yakubu. I'm so happy that you're joining us. And oh, we have a super chat here. Dulles, thank you so much for the super chats. I really appreciate it. You are amazing. Let's see. Not sure what this is. I was asking why I cannot join the membership while I pay $25. You can if you go to stockcurry.vip/getvip. You can sign up at the $25 rate. You just got to make sure you go to that link right there, stockcurry.vip/getvip, and that is the link to sign up at $25 a month. Let's see what else we got. PPI report. Okay, let's get into that. PPI report effect on the market, please. Yes. So let me talk about that. Let's start with the CPI, and then we'll talk about the PPI. So the consumer price index came out on Wednesday, and expectations were for the headline CPI, that's all inflation, to come in at 8.7%, and yet it was only 8.5%. Now, that is still a significantly high inflation rate. Don't get me wrong, this is not a good thing, but it's a good thing in the fact that it's actually coming down, because the more this comes down, especially if it comes down consistently, then we can expect the Fed to start lowering, or not lowering interest rates, but rather slow down how fast that they are raising interest rates. And I'm going to show you in a minute how that has changed, the expectations for that. The core CPI was the one that I was really looking at, because everybody expected core CPI to rise to 6.1%, but it actually came in at 5.9%, which was the exact same amount that it came in last month. So CPI was expected to rise, or core CPI was expected to rise, but it didn't. It actually came in flat. So that was another beat concerning, or compared to the actual estimates. So overall, the CPI was a phenomenal number. Beat on headline and beat on core. We are really happy to see this come down. Now, if it can start coming down consistently and it comes down again in September, then we can expect the Fed to start slowing down the rate of increases. Now, what I do want to show you is this. This right here is the CME Group's futures Fed Watch tool. So essentially what this is this is where the futures markets are pricing in how big of a rate increase the Fed is going to do. Now, yesterday, prior to the CPI numbers, we were pricing in a 65% chance of a 75 basis point rate hike and a 35% chance of a 50 basis point rate hike. Now that the CPI has come in, the chance of a 50 basis point rate hike is increased to 57%, and the chance of a 75 basis point rate hike is decreased to 42%. So this is just an example of how the good CPI prints, especially if they keep coming down, are going to indicate that the Fed might slow down the rate of increases and not do another 75 basis point rate hike in September, but rather only do a 50 basis point rate hike. Now, the Fed did make it very clear that they are not going to forecast their rate hikes like they have in the past. So we're going to have a lot of uncertainty here, which is probably going to keep these numbers pretty close to the 50-60% range without having one going way above or below the other. So the next question is, what about PPI? PPI is the producer price index, and that number comes out Thursday morning. Now, generally speaking, the PPI is going to fall in line with the CPI. So with the CPI coming in much lower than expectations, we can expect the PPI to have come down significantly. And the PPI, the producer price index, That is the cost of the raw materials that go into everything that is produced in the United States. That number ultimately will have an impact on the CPI, or Consumer Price Index, because everything that gets produced will, within the next month, 2 months, 3 months, be consumed. And so if the cost of raw materials goes up and increases the PPI, or Producer Price Index, then in future months, the CPI, or Consumer Price Index, should be expected to rise due to the higher cost of production. Producers raise their prices, they pass it on to consumers, and therefore consumer prices go up. Now, that said, we can expect that to come down, which again will be good news. It should not have that big of an impact on the markets, since we pretty much have a pretty good idea of what's going to happen after the really good CPI print. The other thing I do want to mention is that the Fed really doesn't look at CPI or PPI when they are making their decisions on the rate hikes. They actually look at PCE, which is the Personal Consumption Expenditures Price Index. It's a mouthful. We just call it the PCE. And essentially, that is kind of like the CPI, but it's measured in a little bit of a different method. Now, I do want to point out that you may have heard that inflation is grossly underreported. And it's absolutely true. If we still reported inflation in the same way that we did back in the 1970s, last time we had super high inflation, our current inflation rate would be over 16%. It would be by far the highest in history. But we don't report inflation that way anymore. There's all kinds of little tricks and tools and modifications they do to make inflation seem lower than it actually is. For example, they might take strawberries and bananas and they say, hey, these are comparable products. And whichever one went up the least, we're going to take that one for inflation. So if bananas went up by 20% and strawberries went up by 10%, they're going to say the price increase of food was 10%. When you go to the grocery store and it's very clear that you're paying a lot more than 10% more. So the CPI inflation numbers today are very modified. They're fake, but we just have to go off something, right? Okay, so that's all said. That's CPI, PPI, PCE. That's how it all affects the Fed funds rate. What I want to do is go through a few more comments. I don't want to get behind, because normally my live streams I get way behind on your comments. So let me see what else we got. As I said, it's not necessarily going to rocket, because we have a pretty good idea that the PPI is going to come in low. That's pretty much priced in today. Let's see. Where do you confirm short interest on a stock? Ortex. I use Ortex for that. You got to pay $80 a month, but it's completely worth it if you're playing short squeeze stocks. Question, are we still in a recession? Is this a good time to buy back into the market? I think I discussed this a little bit in yesterday's video. Essentially, a recession is technically defined as 2 quarters of negative GDP in a row, which we got. We are absolutely in a recession, but it hasn't been officially declared by the national group of economists that kind of make that decision. So, that's what's kind of going on. Stock up with Larry Jones. Larry, how you doing, brother? Thank you so much for joining us. Everybody, please just welcome Larry Jones to the live stream. Throw some coffee cups in the chat. I'd really appreciate it. Thank you, Uncle Larry, for joining us. I'm so glad to have you. I got another super chat here. Thank you so much, Richard. Please, SoFi and high selling pressure from SoftBank. Okay, we'll just discuss this a little bit. So for those of you guys who don't know, SoftBank had dismal earnings. I mean, they lost a ton of money. The SoftBank CEO has put a lot of money into very speculative plays, and they have not worked out for him. As a result, SoftBank has had to sell a lot of their assets in order to shore up their balance sheet. And one of the assets they sold was SoFi. It caused a pretty significant drop in the price of SoFi, but SoFi did recover today. I think one-time hit. I think it's said and done, and we're over it. And I think SoFi is good to go from here on out. Okay, let's see what else we got. Don't know anything about that. I'm sorry. Okay, as far as small caps and what we're going to invest in, I just wanted to let you know that I am officially starting the Moomoo Millionaire Club Challenge portfolio next Friday, so 8 days from today. And on Saturday, I'm going to be releasing a video showing you what I am buying from my initial stocks. And it won't just be my top 2. I'll probably pick like 5 or 10, and we'll go over them in the video next Saturday. By the way, when you invest with Moomoo, they send you all kinds of little cool things. I mean, this little hat they sent me. But my favorite thing they sent me, check this out. Guys, you got to check this out. So Moomoo's little icon is like a little bull, little orange bull. So they sent me this thing. I don't know if you guys can see it. It's like a little bull with glasses. It's like a, I don't know, a Moomoo curry or something. Anyway, they kind of sent that to me. Let me know what you guys think about the Moomoo curry. I think it's really cool. You can get all the little figurines and things when you sign up with Moomoo. And they have like a point system where you get all these cool little free things. By the way, if you guys want to sign up for Moomoo, they're doing, what are they doing right now? They're doing 10 free stocks. So 10 free stocks if you deposit $2,000 or more, and 6 free stocks if you deposit $100 or more. If you guys want to take advantage of that, go get those free stocks. It's at stockcurry.vip/Moomoo. If you guys saw the video I posted last Saturday, you'll understand why we're using Moomoo for the Moomoo Millionaire Club Challenge, because their stock screener and their tools are absolutely phenomenal. So if you want to get those free stocks, you can sign up at stockcurry.vip/Moomoo. All right, let's get back to the chat, see what else we got here. Stock over Larry Jones in here talking with everybody. So glad to see you. Blessings, brother. Let's see what else. Okay, let's get into our analysis. Should we do calls tomorrow? You know, maybe. I don't know. Let's get into the analysis right now. Let's just start with some fundamental analysis, okay? Before we actually get into our technicals. So I just want to sit here and I just want to chat with you guys for a minute. So when it comes to the fundamental analysis, first of all, before I even mention that, when you are looking at investing in the stock market, you're trying to pick stocks, trying to determine if the market's going to go up or down. It's very, very important to have a realistic point of view. You never want to be too optimistic in any one direction. You never want to think the market's going to go up. It's only going to go up. I know it's going to go up by the dip, and that's your entire focus, and you're just 100% confident the market's going to go up. At the same time, you never want to be 100% bearish. You never want to say the market's going down. I know the market's going down. I'm 100% confident the market's going down, because optimism in either direction is going to get you absolutely killed in the stock market. It is so important to be a realist. Anytime you're analyzing anything in the stock market, whether it be a stock or the market overall, it's very, very important that you look at both the bull case and the bear case. You should always have reasons why a stock might go up and reasons why a stock might go down before you ever invest into a stock. You want to make sure you're taking a very realistic and rational viewpoint when you're investing. And the other thing I want to talk about is predictions. When it comes to predicting whether a stock is going to go up, down, market's going to open, down, whatever, you're going to be wrong a lot, and that's okay. Your only goal is to be right most of the time. I have learned that if you're right 60% of the time, you will make money in the stock market. You'll beat the market. And for everybody who's saying, well, you shouldn't make predictions because, you're wrong a lot. You're right. I am wrong a lot, but you have to make a prediction. Every single time you buy a stock, you are predicting that stock is going to go up. Nobody buys a stock thinking it's going to go down. The only reason you would buy a stock is if you predict it's going to go up. You might be right, you might be wrong, but you have to make that prediction before you ever invest any money. So everybody makes predictions. Sometimes they're right, sometimes they're wrong. Right now, I'm going to go through the fundamental, technical, and historical details of the stock market so that we can take a very rational and realistic viewpoint of the stock market and give you both the bull case for a continued bull run and even new all-time highs, and give you the bear case for us continuing to fall back down. So let's start with the fundamentals. Let's talk about some bullish cases for the stock market going up. Well, first of all, we dropped pretty significantly. I mean, we were down over 20% officially in a bear market. One fundamental case is the fact that the stock market is back up over 20%. Certainly, it looks like the bull market is on. The Nasdaq is certainly back in the bull market, according to Wall Street Journal. And psychologically, people are extremely bullish right now. And that bullishness alone can cause the stock market to continue to rise regardless of everything else. Now, in addition, we have inflation coming down, and that is a reason to be very, very bullish on the stock market. We also have indications that the Fed is going to slow down the rate of rate increases, and that is another reason to be very, very bullish on the stock market. Now, let's talk about some of the reasons why we might want to be bearish fundamentally. Fundamentally, we are technically in a recession. Now, you could look at that as a bull case and say it's just a paper recession and it's already priced in. Or you could look at it as a bear case and say we're in a paper recession right now, but it could turn into a far deeper recession. So the recession is kind of bullish or bearish, depending on how you look at it. Now, in addition, another bear case would be the fact that the earnings are going down. Yeah, I mean, with the exception of Disney, that was just phenomenal. But most companies are reporting a drop in revenue and a drop in earnings. Even if they beat earnings expectations, they're still showing significant declines in revenue and earnings. Don't be fooled by a company beating earnings expectations. If a company is expected to lose 50% revenue year over year, and they only lose 40%, they beat earnings expectations. The stock will probably go up for a day or two, but that does not mean those earnings were good. In fact, the earnings were probably dismal. And that's what we saw over and over again this earnings season. Our companies with profits declining 30, 40%, but the stocks are rising on the actual earnings date because they're beating the expectations, which were even worse. So that's one reason to be bearish, is the fact that earnings and profits are going down. Another reason you might want to be bearish is because the layoffs are increasing. More and more companies are laying off employees, and the number of employees being laid off is increasing. That's one reason you might want to be bearish. The number of open jobs available is decreasing. It's another reason you might want to be bearish. So certainly, fundamentally, we have quite a few factors which could point to bearishness. Another thing to keep in mind is that globally, Europe and especially China are entering major recessions. In fact, China is about a month away from a significant catastrophic collapse in their real estate market. So globally, there are a lot of reasons to be bearish. Globally, there's also a reason to be bullish, and that is the fact that the Ukraine-Russia war is kind of winding down. I mean, at least Russia's not invading all of Ukraine, and Ukraine has started some food exports once again. So that's another reason to be bullish. So fundamentally, we got a lot of reasons to be bullish and a lot of reasons to be bearish. Let's talk about historically. Historically, what are we looking at? Well, historically, the stock market generally falls from the second week of August through the second week of October. So for the 8-week period, for the second week of August, all of September, and the second week of October, the stock market historically falls. This will certainly be a reason to be bearish. But on the bullish side, the stock market usually in a bear market will bottom out and start going back up in either September or October. And, we're in July a little bit early, but certainly a reason we could be bullish. Another reason historically is that very often during a recession, no, take it back. During a bear market, if there is no recession, the stock market will often hit a new all-time high before a recession officially starts. A little bit complicated there, but since the United States is not officially in a recession, it's possible, historically speaking, that the stock market could go back up to a new all-time high before that official recession is declared. So that's another bullish indicator, just looking at historicals. So again, historically, we have some bearish cases. We have some bullish cases. Now, I'm going to go show you the technicals, and you're going to see the exact same thing. Some bullish, some bearish. But again, we're going to be very realistic and neutral and give an honest opinion of the stock market. Let's start with the SPY. So the SPY is, again, very bullish, but also a little bit bearish. All right, starting with the SPY, we're going to notice that we have been in a massive bull run for the past 6 weeks, with an especially bull run occurring over the past 3 weeks. Now, The RSI is rising. It is not yet overbought. It's a 68, overbought 70. So that's still quite bullish. Anytime the RSI is above 50, that's bullish. The MACD is still green. We have not had a death cross on the MACD. That's bullish. The candle is above all of the EMAs. That's bullish. The 10-day EMA is above the 21-day EMA. That's bullish. For all intents and purposes, SPY, which is an S&P 500 ETF, is 100% bullish. But there is a little bit of bearishness, just a little bit. One, there's a psychological level of $420, which SPY refused to get above today. So that's a little bit of a bearish indicator. The other thing that's bearish is you're going to notice this little blue line here. And this blue line represents, with a little bit of exception, the blue line represents the top of the downward trend. Now, this downward trend, you see how it's kind of growing the further down it goes. This is called a broadening descending wedge, okay? Broadening descending wedge. And a broadening descending wedge is a bullish indicator, but it has to break out first. So during a broadening descending wedge, you get bounces from the bottom, bounces off the top. So bounce, 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 maybe, bounce. But eventually it's going to break out. And when it breaks out, it skyrockets. So if SPY, or the S&P 500, can break out above this downward descending wedge, we could expect a skyrocket to the upside. However, there's also just equally as likely that SPY, or the S&P 500, is going to bounce here, since we are at the very, very top, and we're going to start going back down. The other thing that's bearish on the technicals is this candle right here. This candle is called a hammer. Now, I want to show you guys what a hammer is. It's a hammer candle, okay? It looks kind of like this. You see, we got the low, the wick here, and then we got a green candle like this. We just pull up the S&P candle. See that? See the wick down here in the green box? So that's called a hammer, especially if it's by itself. That's called an abandoned hammer. So it's kind of abandoned all by itself up here. And that hammer is a bearish hammer. It actually indicates that the stock, or stock market in this case, is about to turn around and decline. So when we get this type of hammer, it's bearish. It indicates a reversal in the stock market and the start of a downtrend. So technicals, as far as the RSI, EMAs, and MACD, are 100% bullish on SPY. There are 3 bearish indicators, but not really that the market is bearish, but rather that we are about to have a reversal and go to the downside. One is the MACD is very, very close to being overbought. We're only 2 away. Or sorry, not the MACD, the RSI. And the other thing is you'll notice that pretty much every time, let's see, on the downtrends, let's see, we hit 60 and we started going down. Let's see where we were on this guy. We were at 65 before we started going back down. We topped out at 65 back here in March, continued downward. And then over here, we are currently at 60, almost 68. So a little bit higher from where we turned around and went down in March. Now, taking a look at the MACD, we have some downturns. Let's see. This was kind of a big downturn. The MACD was at 6.46 at the high. And then this was a downturn. The MACD was at 4.4. This was the top downturn. The MACD at 5.7. And the MACD is currently at, let's see, 7.3. So the MACD and RSI and the candle and the downtrend all point to a top here with a reversal and then going down from here. So we'll see. Some bullish, some bearish. All right, QQQ, which is a Nasdaq 100 ETF, same exact thing. Just ignore this top line. I drew a channel before I drew this, but same exact thing. It's a broadening descending wedge. Same exact thing over here. We're at 66 in the RSI, which anything above 50 is bullish. We have a bullishness on the MACD with the green histogram and the gold above the blue. That's bullish. The candles are mostly bullish. They are above the 21-day EMA, but they're not quite yet above the 200 or 300-day EMA. we did get some rejection here at the 200-day EMA today. And the EMAs are also bullish with the 10-day EMA above the 21-day EMA. The exact same thing if you look at bearish indicators. The RSI is almost overbought, which would be bearish. If we look at the MACD numbers, when we topped out over here, we hit, let's see, 7.76 on the MACD before we started going back down. Over here in March, we hit 5.55 before we started going back down. And we're currently at 7.61. So, you know, the MACD, the RSI, oh yeah, we also have that hammer candle, as you can see here. So, and with the rejection of the 200-day EMA, all of that points to a top in the Nasdaq and then turning around and going back down from here. So the technicals are very mixed. Some bullish, some bearish. What I'm going to do right now is I'm going to get back to your comments. So I want to make sure we don't miss any. And then I'm going to go way back to the year 2000, 2001, 2002. And then I'm going to go look at 2008. I'm going to show you what happens during these relief rallies. Because technically speaking, the March rally we got was a relief rally. The current rally we're getting is a relief rally. It's not usually called a bull market until we've been in it for a few months. We've only done this for 6 weeks. So we'll have to see if this is going to last. But I'm going to get to the historicals. We're going to go compare this to the year 2000 and the year 2008 in just a minute. But let me get to your comments first. I want to make sure I'm not missing anything. So give me 1 second while I get through your comments and just, I don't know, sing a little song to yourself while I go through these. Let's see, there's a 25% chance or 75% chance, having a 40% chance, so things will certainly be uncertain. You know, you're absolutely right. And you know what else? 75% of statistics are made up. Let's see. Yeah, nobody knows. As you can see, as I just went through everything, complete toss-up. I mean, it could literally go either way. We have no clue where the market's going to go right now. Yeah, we talked about that. Core CPI already. It came in flat. Did not go up like we expected. The midterms. Okay, historically, during a midterm election year, the stock market doesn't bottom out until October because it kind of trades in fear going into the midterm elections. And then in November, after the elections are the first Tuesday in November. After the elections, stock market rallies. Massive rally in November and December. So I'm still expecting a massive rally in November and December. But what happens between now and October is the big unknown. Let's see here. Okay, let's talk about some of the options that I'm in. I post this stuff on Twitter, so if you're not able to get into the VIP Discord, I don't explain my reasoning on Twitter, but I do take the time to kind of show you guys what I have done. So let's go through some of these. So one thing I did today is I got some more Amazon puts, because Amazon's PE ratio is still way above 100. And I think that's going to come down. And then we also got a TTD put, which is the trade desk. And by the way, trade desk blew earnings away. I mean, if you thought Disney earnings were good, they were nothing compared to the trade desk. Phenomenal earnings. But I think the trade desk just went up a little bit too much. The trade desk is now at 80 on the RSI. And I just think it was a little bit too much. I just think they're going to have a little bit of a pullback. I would still be super bullish on the trade desk, but I do think they're going to have a little bit of a pullback. So that's what that option is. I did sell my SONW put for an 87% loss. And then I sold my QQQ call for a 183% profit. So, you know, anytime you're trading options, you're going to win some, you're going to lose some. So we had a loss of 87% on the snow option and a profit of 183% on the call option, QQQ call option. So, you know, that's just kind of what it is. It's kind of a lot of hedge funds will try to stay neutral, meaning they'll have an equal number of bearish positions and an equal number of bullish positions. in order to make sure that, you know, they don't really miss out on a trade in either direction. So, for example, they might go long on AMD and they might go short on INTC. You know, long on AMD and short on Intel. That'd be an example of what a hedge fund might do. So yeah, kind of mixing it up is always a good idea. Okay, question. Do you think Tesla is dropping tomorrow? I don't know what Tesla's going to do. It dropped in the morning, but man, it sure had a bullish run from about 10 a.m. onward. So I don't know what Tesla is going to do tomorrow. I think the selling from Elon Musk is done. It's priced in. There might be a little bit of fear there that he might sell more, but I have no idea. Let's see what else we got. What is a good price entry into QQQ? It's a good idea to buy 100 shares, sell covered calls on it. So what you're talking about, buying shares, selling covered calls, this is generally part of a wheel strategy, and it only works if the market goes up. So if you think the market is bullish and we're going to continue on the bull run, we're going to continue going up, then yeah, that is a great strategy. Let's see what else we got. Amd Predictions. Nope, don't have any predictions. That guy is running up massively on speculation, and it is impossible to predict what's going to happen with anything speculative. Just give you an example. We can just pull up HKD. You guys remember this, right? No, that's not HKD. 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 Look at that chart for you. Went from what's it? Well, really about $12 to $2,500, back down to $200. I mean, what's that? A 90% drop in 1 week? I don't know what happened speculatively. You know, a lot of these speculative plays, they spike up and then at some random unknown time they fall back down, and it doesn't matter if there's short sellers or not. It just gets wild. Now, when it comes to AMC, look, it certainly looks a whole lot like this pop. You know, that looks like that. The question is, where's the top? You know, at the same time, that top looks an awful lot like that. So it's possible it already topped out. I mean, that looks like that. That looks like that. I don't know. There's a good chance we topped out. Now we're going down. On the flip side, if we continue in a bull run and retail investors continue to buy it, I could see it getting back up to 32. Why not? I have no clue. Speculative stocks are like impossible to predict. Just literally impossible. A Disney price target this week? I don't know. I don't even know if I can give you a price target. I'll just go over the technicals. So the next resistance level on DIS is going to be $120. And that's actually where it closed after hours. So I don't know. There's a chance that could be it. There's a chance 120 is the top. I think if the market drops tomorrow, 120 is the top. If the market rises tomorrow, I guess we get up to 137. But like I said, it's still a little bit overvalued. Phenomenal earnings, but still overvalued. Let's see what else we got. Oh, yeah. I want to show you guys something for this. So for the Millionaire Club Challenge, I want to show you guys something cool. What I'm going to do is I'm going to go to my channel here. And youtube.com/Stock Curry. We're going to go to the current video, which is this guy right here. Okay, mute that. That way I'm not getting an echo. Okay, so down in the description, if you guys will expand the description, I'll see if I can blow this up for you guys so you can see it. If you guys will expand, whoops, calm down. If you guys will expand the description and get past the Moomoo Webull links, and right here you're going to see this Millionaire Club. You guys see that? There's a link here to a portfolio. So like I told you guys, the Millionaire Club Challenge is going to be on YouTube. It is 100% on YouTube. It is not, you don't have to join the VIP to get this. Completely and totally free for everybody who's watching the YouTube channel. This is how the portfolio is going to work. So every 2 weeks, I'm going to note the amount of funds that I deposited. I don't know if I can blow this up or not. We'll see if I can get this bigger so you can see it. Every 2 weeks, I'm going to note the amount of funds I deposit. Now, these are just examples from the, from the free stock. I'm going to delete this because I'm going to limit this to the actual trades we make. But this is how it's going to show up. It's going to show up as the date we buy, the date we sell, and whatever PE ratio that was. So obviously, I'm not holding on to any of these with these losing PE ratios. But we're going to note, you'll be able to go in here. You'll be able to see every single trade we buy and sell. You'll be able to see our total amount of money that's been deposited into the account. You'll be able to see the current portfolio value and how much we're up or down, profit or loss. You'll be able to see exactly how much was deposited. And then going over the right a little bit, this is going to be all of our open positions. You'll be able to see our current price, our average price, how many shares we have, profit loss, the PE ratio when we first started buying it, as well as the current PE ratio. And then you're going to be able to see all the closed positions, and you'll be able to see what we bought at, what we sold at, the profit or loss, what the PE ratio was when we bought it, and what the PE ratio was when we sold it. So all of that information is going to be here, and it is completely and totally free of charge. There is no, absolutely no requirements to sign up for anything. And the videos for this are going to be posted on YouTube every other Saturday. So that's what's going on with the Moomoo Millionaire Club Challenge. And like I said, go get your 10 free stocks with Moomoo at one of these links. If you're in the US, you get 10 free stocks with $2,000 or more, 6 free stocks with $100 or more. Stockcreate.vip is Moomoo. Webull, actually, it's not 6 free stocks. It's actually up to 12. 6 is the minimum. You'll get up to 12 with a $1 deposit. And then Interactive Brokers if you're not in the United States. And then, yeah, that's it. Okay, let's get out of here because I want to get back to your questions. Okay, what else we got? And then we're going to get to the historicals, and you're going to see the prior bear markets and how things go. I think you're going to be a little surprised. So you think, Eric thinks we're in a rubber band right now. We're stretching higher. It's about to snap downward. You could be right, could be wrong. We'll see. I saw ETH rising after the CPI announcement. Is this temporary? What's your opinion? So, a lot of people loaded up on crypto right as the CPI announcement came in. And it wasn't just ETH, it was Bitcoin also. And the reason for that is because crypto follows the stock market. So whatever the stock market does, crypto does it, but crypto does it like twice as much, right? If the stock market goes up 10%, crypto goes up 20. If the stock market falls 5%, crypto falls 10. So the crypto is like a, I guess you could almost call it like a derivative exponential leveraged version of the stock market. So that's what happened with ETH. Now, of course, Ethereum has other catalysts such as Ethereum 2.0, which will be coming out at some point. So Ethereum obviously is much more bullish than any of the other cryptos right now. But that's what happened. That's why it shut up. See, we did that. I don't know anything about Boeing. I'm sorry. You're bullish because you think China's going to attack Taiwan. Oh, wait, bearish. You know, looking globally, if China attacks Taiwan, yeah, that's going to be like the Ukraine-Russia war all over again. But only this time it's going to be way worse for the United States because Russia is the United States' smallest trading partner. They're like 30 out of 30. China is the United States' largest trading partner right behind the European Union. So, I mean, if China invades Taiwan and the U.S. starts sanctioning China and China starts sanctioning the U.S., man, that is going to be a nightmare. Talk about a semiconductor chip shortage. I mean, those come out of Taiwan. Can you imagine what would happen if we could no longer get semiconductor chips out of Taiwan? It would be devastating. So I really hope China doesn't invade Taiwan. We'll see what happens. Let's see. Did I sell my Amazon puts? No, I bought more. Let's see what else we got. Yeah, if you're waiting for a bottom and the market goes up, you could be losing out on. However, if you are buying in here and we're at the top of a rebound rally, you could be in for a world of hurts. No telling what's going to happen. Well, let's have to see over the next few days. Let's see. I was wrong about the July CPI. All I did was tell you guys what the average estimates were. All I did was report the news on that. I didn't make any real predictions. And I did say that if CPI came in lower than expected, we'd see the stock market rally. Certainly did. QQQ was up 3%. SPY is up 2%. Happened just like I said. Let's see what else we got. PayPal. What? Let me think. I had some PayPal puts. We sold those for a miniature profit. I think it was like 13%. PayPal's PE, current PE is at 57. Forward PE is at 25. A little bit expensive on the fundamentals. A little bit. Technicals are bullish though. Well, wait, we're at almost 70 on the RSI. So technicals are bullish, but it looks like we're topping out. Oh, look at that. You guys know what that is. What is that? We just talked about it. That is, what is that candle, guys? It's a hammer. What does a hammer suggest? Suggest a rebound and bearishness to the downside. So PayPal's still a little bit overvalued fundamentally, and technicals are pointing to a rebound to the downside. However, they are bullish. Yeah, I went over all of that. Don't know anything about that stock. Okay, you know what? Let's just go ahead and get into this. Let's get into our previous rallies here. So the indicators look bullish. They've always looked bullish when we've topped out. It's not just this year. We're going to go to the QQQ. This, by the way, is the Nasdaq ETF. And we're going all the way back to the dot-com bubble. Now, one thing about this was not a 50% drop in the Nasdaq in one day. This is a glitch in Webull's reporting. So let's just start with that guy right there, which is the first real number. This drop, by the way, is only 3%, not 50. Anyway, ignore the little glitch. Whoops, what happened? Okay, here we are. So what I want to point out is this. We had this drop, right? We're dropping. Now, at this point right here, we bottomed out at 64. And then by this point, we were all the way up to 91. 64 to 91. What's the difference there? 91, 64 divided by 6. That was a 42% rise in the Nasdaq over these few, what's that, about a month. About probably month and a half, 6 weeks. 6 weeks rise, 42% rise. Was that the top? Was that a new bull run? Nope. Kept going down. Look at this. Okay, let's go. This bottomed out at 74, topped out at 92. So let's see, 92, 74, 74. That's a 24% run up. Look at this. A 24% run up from August 2nd through August. In 1 month, the Nasdaq ran 24% up. Was that a new bull run? Nope. Kept going down. What about over here? What do we got over here? We had a low of 40, call it 47. We had a high of 60. Where'd my calculator go? Did I close it? Here. 60, 47, 47. That was a run of 27%. Look at this. 27% up. Was that a new bull run? Nope. Kept going down. All right, let's go And we can just keep doing this over and over again, right? That was a bull run. Nope, kept going down. That a bull run. Nope, kept going down. You guys get the idea. During bear markets, the stock market will go through multiple relief rallies, and these relief rallies will usually be more than 20% up. Is the Wall Street Journal right that we're in a new bull market? No. We are just in a relief rally. I don't think anybody would be bold enough to call this a new bull market until we get back to all-time highs. So, look, we had multiple times in the year 2000. Let's go to 2008. Let's go look at that bear market and see what we got here. So we topped out here. We dropped. We hit a low of, what was that, 43.50. We got back to a high of 47. That's only about a 10% rise. Okay. And then we had this massive drop here. Got down here all the way to a low of 37. And within 3 days rose up. That's crazy. Anyway, got back down to 36 and rose all the way up to, what was this? 45, 36.45. Is at $9. I don't keep closing my calculator. So 9 divided by 36, that was a 25% rise. A 25% rise was this. And look how long that lasted, guys. This was from March 17th all the way up to June 5th. So March, let's see, April, May, June. So about 2.5 months, a 2.5 month rise up 25%. Was that a new bull run? Was that the end of the bear market? Well, let me tell you something. I traded through this, and I don't remember the 2000 bear market that well. It was 20 years ago. I don't really remember it, but I really remember the 2008. And let me tell you, at this point right here, as we were running up, everybody thought that a bear market was over. In fact, we went from a high there of, what was this? 49 down to 36. Okay. That was, where'd that calculator go? Look at this. It was from 49.31 to 36.76 divided by 49.31 is a drop of 19%. At this point during the 2008 financial crisis, when we were down 19%, we were not even in a bear market yet. Okay. This was not even a bear market. And by the time we started rising up, you know what everybody said? We said the correction is over. Nobody was even calling this a bear market. We were calling it a correction. And we all thought the correction was over. We got our correction, no more correction. We're moving on. And then this happened. It started going back down again. And we're all sitting here like, oh, crap. What is happening? Like, we thought we were done. Everybody was bullish. Everybody was buying. And the stock market started going back down. And then it started rising again. Like, okay, well, I don't know what that was, but now we're on a new bull run. And then whammo, all hell broke loose. And this is where Lehman Brothers collapsed and it just tanked. So, you know, the stock market goes through a lot of relief rallies. Yeah, it wasn't even the end of it. What did it stop here and it just kept going? The stock market goes through a lot of relief rallies. And nobody knows when that relief rally is over. And we're going back to, I don't even know what's happening right now. Nobody knows when the relief rally is going to be over and we're going back to all-time highs. What I can tell you is we've had 2 relief rallies. We had more than that in 2008 and a lot more than that in the year 2000. Don't be so foolish. Well, let me say this. Don't be so optimistic into thinking the stock market has to go up and has to go back to new all-time highs. Let's be realistic. Let's consider the fact that, yes, the market's 100% bullish right now, but let's also consider the fact that there are a lot of indicators that point to this relief rally ending in the next day or two and us going back down. Okay, so that's what I have to say about that. For the rest of the video, man, we're already at an hour. I'm just going to go through the rest of your comments and then we're going to end it. While I'm going through these, make sure you hit that like button and subscribe. And if you guys are on YouTube, click the bell icon and click all. If you're following on Twitter, make sure you follow the page and like. For those of you guys who didn't know, my Twitter is this, twitter.com/realscottcurry. Okay. Would I be buying right now, or am I cash up? I remain cash up. I have started a dollar cost average into a few value stocks, but very, very small positions, like less than $5,000. Very, very small positions. Mainly, I remain cash, pretty much all cash. Let's see what else we got. All the negative news is out. Recession, inflation, war. What else? Well, we could get another war with Taiwan. We could get China collapsing. We could get Europe entering a recession. We could get earnings continuing to go down. We could get a lot of things. There's a lot that could cause it to go down. And then the other thing is valuations are high again. So when the stock market drops down, when we got down to this level right in here, the PE ratios finally hit 15, like across the board. On an average for the entire market, we're finally at a PE of 15. Now we're back up to 17. And as earnings continue to come in with reduced earnings, when earnings go down, the PE ratios go up. So PE ratios are now back up to around 18, 19. And we're expensive again. The stock market, once again, is expensive. So just another sign that we could. Hey, we got another super chat. Christian, thank you so much for the $1.99 super chat. Really appreciate it. You are awesome. We talked about AMC a little bit. Is this another super chat from Christian? Man, you are the man. Thank you so much for 2 super chats. You guys are awesome. Okay, quite a few asks about, let's see, Neo, Baba. We'll talk about Neo and Baba in a minute. Let's see what else we got. What's this opinion? George, I don't think China will start a war and lose all that economical improvements that they achieved through us. Yeah, you're right. If China were to start a war, they would certainly financially be in a very difficult position. They saw all of the sanctions that happened against Russia, and I don't think China wants that. So yeah, there's certainly a huge deterrent for China not invading Taiwan. Let's see. Anything in the options flows for the big ELFs that you think indicate direction? No. Options flows are extremely difficult to figure out. If you see like a large option, let's say you see a large amount of put options bought, does that mean somebody's bearish? No. Usually when you get a large amount of put options, it means somebody loaded up on the stock and they're buying the put options as a hedge in case the stock goes down. So option flows, they're very, very difficult to actually make any predictions out of. The only thing I really use them for is if I see a spread, like a vertical spreads are pretty easy to see. And on a vertical spread, that's an options trader and what direction they're going. So it's about all I really use them for. Let's see. Don't see the link for the $1 million stockcurry.vip / oh, it's down in the description on YouTube, but only starting in this video. Sorry, down in the description. You gotta expand the description to see it. Otherwise, it's hidden. Okay, guys. I got through all the comments. I'm not going to respond to any more comments, but I will go through Neo and Alibaba for you guys, and then we're going to end it. So, Neo. If we look at the technicals on Neo, they're 100% bearish. The RSI is below 50. It's bearish. The MACD, fairly neutral, but it is negative. That's bearish. The candles are below all of the EMAs. It's bearish. The I can't even tell. The 10-day and 21-day are almost neck and neck here. So kind of neutral, but a little bearish. That said, my biggest problem with NIO specifically is the fact that China is entering a recession, and NIO sells cars in China. They're not that global yet, so a slowdown in China is going to have a significant negative impact on NIO. So I'd be very, very, very careful about buying NIO. The other concern I personally have with Chinese stocks is that in China, it is not a crime to defraud foreign investors. So NIO could legally lie about their earnings, and that's fine. There's no law against that in China. And I know you guys are saying, well, aren't their numbers audited? And yes, they are audited, but you have to understand that an audit does not verify the numbers are accurate. An audit verifies that the numbers that were given, true or false, were reported according to general accounting practice guidelines. That's all an audit does. It just goes through and it makes sure that all the math adds up, basically. Now, the other problem I have in NIO is the fact they're not profitable. And I don't like investing in unprofitable companies during recessions because their losses tend to expand. So for all those reasons, I really don't like NIO right now. All right, let's go to Alibaba. And Alibaba has been hit with a lot of fears around delisting because, once again, it's a Chinese stock. And a lot of people think Alibaba is lying about their numbers. They're not meeting our audits. They're not even meeting our general accounting practices. So they're at serious risk of delisting here. So, this is tough, guys. This is tough. We'll see what happens, man. I don't know. I wouldn't touch it. Personally, would not touch it. Obviously, current PE of 42. That's high, especially considering all of the risks associated with the stock. Yeah, I wouldn't touch Chinese stocks right now. With China going into recession, I would not touch it. I think China is going to have a really, really tough time. All right, guys, that's going to wrap it up. Thank you guys so much for joining the live stream. Once again, don't forget to hit the like button and subscribe. Click the bell icon if you guys are on YouTube. If you want to get those 10 free stocks with Moomoo, go ahead and sign up. And of course, the more you trade, the more you learn, the more you go through the training, you get cool free stuff. Get little hats, maybe get a little figurine that looks like you. Moo, moo. Bulls don't even moo. Cows moo. Bulls grunt. They would be like, I don't know why they call it Moomoo. They should have called it. I feel like that's such a manly name, right? What platform do you trade on? I trade on. Anyway, guys,